Well, joining us to talk markets on this big week of market action, we have Jarod Creed. He's owner of JC Ag Financial Services, as well as owner and partner in Elite Ag Insurance. And we also have Joe Vaclavik of Standard Grain. All right, Joe, I'm going to start with you because USDA's reports this week definitely sent shockwaves through the markets, and not in a good way. What caught the market by so much of a surprise this week?
Acres times yield. There were too many corn acres, and the yield was larger than what the trade had expected. And that combination left us with a U.S. crop estimate for 2025 north of 17 billion bushels, more than a billion bushels. I say 17 billion bushels, more than a billion larger than the previous record. So the trade was caught totally off guard by the size of the crop, and that was really the long and short of it. There's a lot of debate. Was the yield number accurate? Were the acres accurate? Have the acres ever been accurate? A lot of debate about that, but that was the big surprise.
Yeah, so Jarod, when you look at a chart that shows the changes in carryouts from past USDA reports, this week's report, as Joe mentioned, it definitely stands out. We saw such a huge jump there. How did we get here?
Well, I'm going to add on one more piece that Joe mentioned. The harvested area was a big change. Adding another 1.2, 1.3% to a 99 million acre pot is a lot more additional bushels to go around. However, I don't want to necessarily just create all a cloudy day type of view here. At the same time, with this 17 billion bushel plus crop, we have a demand base now that is larger than any crop that we had ever raised in any prior year to last year. So we've got demand firing on all cylinders, and quite frankly, a 2.2, 2.3 billion bushel carryout in today's world in the corn market is nothing compared to how detrimental that type of demand, or excuse me, carryout would have been 5+ years ago on a much smaller demand base.
That's a really good point. But you hear farmers also saying if we wouldn't have such a big crop with this demand base, maybe we would see prices higher. But Joe, we saw a 3.6 million acre jump in planted acres compared to the June survey. Farmers are calling USDA either incompetent or corrupt. I mean, is there a reason for producers to be so suspicious and frustrated right now with the reports that we saw this week?
My personal opinion is that it's not an opinion. USDA is understaffed. Understaffed to what degree, I don't know. That is the simplest answer to the reason that the data has been, the word I've been using for acres is janky. It's kind of all over the place. You saw these big moves during the growing season that you wouldn't typically see. And I know the survey response rates are never great. That was, again, the case this year. But I think that the easiest and simplest and most obvious answer is that USDA has staffing problems. They're doing relocations. They, I think, paid people to quit, basically. I think that's where the problem is.
Jarod, we can argue if this is valid, if this is accurate all day, every day, but these are the numbers we have at this point. And producers who had unsold bushels lost a lot of money after this report this week. What implications, though, could this have on crop insurance prices?
Well, it certainly has an implication on crop insurance prices as we move forward into the month of February, and some averages are actually in process right now. I don't know if we necessarily did enough damage to crop insurance prices in a one-day stretch that is really going to matter long term. Quite frankly, our insurance price on corn last year, $470, and if we started the average today, we'd be at $450. I would not be surprised if we come in somewhere in between there. I think the larger implication is, what does that insurance price end up being, and how much of a potential impact does that have on acre intentions as we move forward into 2026? So not just the crop insurance programs, but also to an extent, there's a tremendous safety net from Title I programs now from Ark County and PLC that the average producer most definitely needs to be considering what price moves up and down actually mean from combining their crop insurance coverage, combining their Title I safety nets. I don't want to say that the world is great right now in agriculture in any way, shape, or form, but the facts are the facts. That part of the reason that we planted as many acres as we have is the safety net to the farmer is arguably the best that it's ever been, even in the face of extremely high input costs that we're operating in today.
So when you look longer term, and Jarod, that was great information and something growers really need to think about. But when you look longer term, Joe, what is it going to take to turn these corn prices around, considering we could have large corn acreage again this coming year?
I think we will have large corn acres, but it's always as simple as weather. We've gone essentially 3 straight years in the United States without a major weather hiccup. We've had good yields on large acres. You're still only one U.S. weather problem away from a much different market, especially as it relates to corn, where we use most of our corn domestically. We're the biggest producer on the planet. We're the biggest exporter on the planet. I do think we're going to plant a lot of acres of corn just because the soybean price is so incredibly poor. And as Jarod mentioned, the safety net in corn is probably going to end up looking better ahead of the growing season. You could see some demand stuff come out of the woodwork. Absolutely. I know the demand numbers projections are already pretty high. They could get higher, but I think the simplest and easiest solution is a weather issue. It's been a while.
Jarod, do you feel like at this point the most bearish news may be in when it comes to corn prices, and maybe we could see more friendly price action in the coming months?
It's a stretch to say that we've been on a demand-led rally, but the facts are the facts that we've rallied front month corn prior to the report darn near 70 cents from prior to our harvest lows. So if our demand base, as Joe mentioned, continues to climb higher, then yes, I do think the worst of the worst is behind us, but we can still find ourselves repeating this cycle again in 12 months from now from just overproducing in a not just domestically but globally. I mean, the globe has not had a weather issue for what feels like an eternity. Odds are that'll happen at some time. Is that in 2026? Is that 27? Well, who knows? But I just continue to go back to the idea that our demand base is so large today that the bar is set so high for the US farmer that there is a situation unfolding here that the farmer, US farmer specifically, cannot afford a misstep. And I don't mean that to the farmer financially. I mean that to the global demand for our product. Ever since our report on Monday, we have had stellar flash sales just coming out of the woodwork. And I don't know if that's necessarily going to stop anytime soon. So the idea of planting 98, 99 million acres of corn again and achieving a 185 plus yield, the combination of those two, that is a multiple standard deviation above normal. That is a incredible accomplishment if it actually takes place.
Well, Jarod mentioned flash sales, and we've seen some soybean sales too. Joe, soybeans are really searching for a story. I mean, you look, other than the October rally that we saw, we've been kind of range bound here, it seems, with soybeans. So what would it take to support soybean prices this year?
It would appear as if a lot of the Brazilian headlines or potential friendly Brazilian headlines would be behind us. It's mid-January. If you were going to see a Brazil crop scare event, it probably would have happened by now. It's not to say you couldn't see a late season anomaly, but they've already started harvest. The export situation is interesting. I mean, Brazil keeps producing more, and we've got the White House promising us 25 million metric tons worth of Chinese business for each of the next 3 years, which is kind of hard to fathom, honestly, not because of trade relations or anything, but just because Brazil has big crops every single year, and they keep getting bigger. And I'm not sure that it's necessarily feasible to do 25 million. I hope we do. I hope we sell every bit of it and more, but it's a big question mark for me.
Jarod, real quick, there's a lot of farmers down right now after this week's price action. What is your one piece of advice for farmers?
The one piece of advice is something that they have probably haven't had to consider for a better part of 5 years. If we look across all of our client base, I would tell you that approximately 15 to 20% of the total revenue that a farm will generate on the crop that they harvested from 2025, they won't even see until a stretch of about the next 9-10 months. So it's just making sure you're on top of the total revenue picture. Again, that goes back to Title I, potentially the tariff bridge relief payment, the balance of the SDRP, any type of area-based insurance products that they are set to potentially receive in June. Massive adoption rate to that this last year. Make sure that we're looking at the entire revenue picture versus what I would argue in today's financial world, we're kind of doing loan renewals at a time that everything's not complete at this point.
Yeah, a really good point. Jarod, Joe, thank you so much for joining us. I appreciate it. We need to take a quick break, and then it's Chip's Corner next.